Good afternoon, everyone. Welcome for the mid-year 2026, the unaudited financial statement and results of Oman Cables. I'll start by sharing my screen, while also in parallel welcome on this call our Chief Executive Officer, Erkan Aydurdu, and our Chief Financial Officer, Marcelo Di Papa. I'll share the screen and I'll give the floor to Erkan to start the meeting.
Hello, can you hear me? Can you hear me?
Yes, we can hear you.
Okay. Assalamu alaikum wa rahmatullahi wa barakatuh. Good morning, everyone, and thank you for joining us today. It's a pleasure to welcome you to our H1 2026 analyst meeting. Today, I would like to share our first half performance, our perspective on the market environment, and how Oman Cables continues to position itself to capture the structural opportunities created by energy transition, electrification, and digital infrastructure. Around us, energy systems are evolving rapidly through electrification, renewable energy, digital infrastructure, and the AI-driven demand. These trends are fundamentally increasing the need for resilient, high-quality electrical infrastructure. Within this context, Oman Cables is evolving from a traditional cable manufacturer into a trusted solutions provider, combining over 40 years of the local manufacturing excellence with Prysmian's global technology and innovation. While the external environment remains dynamic, we believe our strategy, investments, and disciplined execution position us well for sustainable long-term growth. With that, let me begin by discussing the environment in which we are operating. The first topic is naturally the geopolitical environment. The Middle East.
While moving to the slide again, let's introduce a video to our analysts to start with, and then move to the geopolitical.
Sure.
Sorry.
From the heart of Oman, we carry light, we carry power, we carry possibility, decades of craft, turning vision into reality. 4 ambitions, 1 journey, climate change, innovation, social impact, role model. Every switch matters. Every step counts. We connect the energy of change from sunlit deserts to wind-swept coasts. Nothing wasted, everything renewed. The clock is ticking. We're racing towards a sustainable tomorrow. In our labs, innovation never sleeps, creating sustainable solutions for a cleaner world. With transparency, we measure. With integrity, we certify. And with action, we contribute to a low-carbon economy. We aspire. We open doors for tomorrow's minds. And now, a new chapter begins. A place to learn, a place to lead, a place to act, powered by the sun, shaped by innovation, a living symbol of our commitment. Oman Cables, for people, for planet, for generations.
Okay, perfect. The first topic is naturally the geopolitical environment. The Middle East continues to experience regional tensions affecting shipping routes, logistics, and commodity markets. While these developments create uncertainty, I am pleased to say that have not materially impacted our operations or customer commitments. This reflects the resilience we have built over many years through diversified suppliers, alternative logistics routes, disciplined inventory management, and strong governance under our emergency risk committee. In today's environment, resilience has become a competitive advantage. Customers developing critical infrastructure increasingly value reliability of supply alongside quality and cost. We maintain a disciplined approach to risk management, and our mitigation measures continue to be effective. The only thing that we are closely monitoring on this environment is, of course, the price volatility of the metal and the non-metal raw material, and also pressure on the net working capital due to the inventories and also the high value of the materials input. Then I would like to pass through the macroeconomics and the business environment, how we see that. Turning to the macroeconomic environment, global growth has moderated and commodity markets remain volatile. However, the structural outlook for our industry remains very positive. The current regional dynamics could even accelerate Oman's attractiveness as a resilient logistics, industrial, and investment hub supported by its strategic location and political stability. The energy transition, electrification, renewable investments, industrial expansion, and digital infrastructure continue to drive long-term demand for cables and electrical solutions. For Oman specifically, Vision 2040, political stability and increasing investment in infrastructure position the country well for sustainable industrial growth. While we acknowledge short-term volatility, we remain confident about the long-term fundamentals of our targets. This slide summarizes who we are. We combine over 40 years of manufacturing excellence in Oman with more than 150 years of Prysmian global technology leadership. Today, we export to more than 50 countries, operate for advanced industrial facilities, and proudly serve as Prysmian regional headquarters for the Middle East, Africa, Russia, and Turkey. Our strength lies in combining deep local roots with global capabilities, allowing us to compete internationally while continuing to create value within Oman. Sustainability, accelerating sustainable growth. For us, sustainability is not a reporting exercise. It is a business strategy. Our roadmap is fully aligned with Oman Vision 2040 and the global energy transition. As electricity becomes increasingly central to economic development, sustainability, innovation, governance, and people development become key competitive differentiators. Every investment we make is designed to strengthen long-term value creation while supporting customers in building cleaner, safer, and more efficient infrastructure. I am very pleased to also share with you that in the very recent days, independent third party, namely Wadi Rating, has made a positioning of the companies on the sustainable efforts. Oman Cables OCI is in an elite disclosure position. I am happy to also share that OCI is fourth in the rating among all listed companies on MSX, and OCI is first in the rating in the industrial sector. That also proves how committed we are on the sustainability. Another important element that I would like to share is from cable manufacturer to the solution provider. We are touching this point more and more. This is probably a lot of strategic evolution, but is happening around the world. The market is evolving beyond simply supplying cables. It's not anymore just manufacturing or supplying cables. Customers increasingly expect integrated solutions supporting renewable energy, grid modernization, electrification, mobility, and digital infrastructure. That is exactly where Oman Cables is heading. Through the strategic investments, such as Plan 3 that we shared before, this is additional medium voltage capacity that, as we speak, is under construction, and we plan to complete in Q4 2027. And our Renewable Excellence Center and our broader technical capabilities, we are moving higher up the value chain. Our ambition is not only to manufacture cables, but to become the preferred partner for critical infrastructure solutions. So let's look to the H1 2026 performance, turning to our first half performance. Our revenues increased strongly to 172.2 million Oman Riyal. Of course, as you see, realize immediately there's a big jump on the revenues, also due to the cost inflation of the metals and the other materials. We were successfully able to protect our marginality, our profitability, and the H1 with 14.5 million Oman Riyal EBITDA. And also we were able to bring this into the net result of 11.4 million Oman Riyal in the first half of 2026. Our scope 1 and 2 emissions has been by location based plus 4%, as we are also growing. We are also looking to the baseline 2024, which is plus 3%, which we are putting a lot of efforts on the decarbonization roadmap. We are focusing on the recycled content. We are focusing on the sustainability products and differentiating innovations like ePath, ecological first cable that has been recognized internationally and certified by the third party that our carbon emissions on our products is lower on this category. Of course, we are working a lot on the design to cost principles to enhance competitiveness, efficiency, and long-term value creation. You may realize that as a percentage-wise, EBITDA over sales, our percentage-wise is lower in 2026, but it's very much a mechanical calculation. If we embed high price of the metals and we normalize this impact, our profitability is standing strong like the previous periods, very similar to previous periods. Just to note also this one. On the empowering stakeholders, long-term success, we believe, requires more than just financial performances. We believe strong engagement with customer, regulators, investors, academia, and industry partners strengthens both governance and competitiveness. We have launched a lot of activities in our academy as well, whether through Sustainability Week, Assurance Day, IFRS Readiness initiatives. We continue building transparency, capability, and trust across our ecosystem. Ultimately, stronger stakeholder relationships support stronger business performance. Last but not the least, I would like to share also our commitment, our community involvement, and CSR. As we are evolving at every dimension, our CSR approach has evolved significantly as well. Today, our focus is creating shared value rather than simply supporting individual initiatives. Through local content, SME development, education, and community engagement, we strengthen our talent pipeline, reinforce our social license to operate, and contribute directly to Oman Vision 2040. For us, local value creation extends beyond what we manufacture. It is about developing people, capabilities, and long-term industrial resilience. Having said that, we can go into the deeper financial details of the first half with Marcelo.
Thank you, Erkan. Here you can see now we can see here the basically you can see the growth as I commented before, and basically the distribution domestic and export maintain more or less the same rate for the previous year. By business, the mix of the business increase basic electrification, help us to increase the sales, and the good mix for electrification help us the profitability, you can see in the next slide. You can see that slide, the split by business for the battery mix for electrification can create a value for the company now is 19.7 million reais in 2026. If you compare 2004, 2005, and 2006, you can see the growth, but basically this one impact for the metal price increase, as Erkan commented before. EBITDA margin in absolute value increase around 2% EBITDA, and net profit around 1%. This proximity for the customer and strong cost control allow us to have stability, profitability level, and the growth despite escalation conflict in the region. Well, net working capital divided by sales, you can see a little increase, but more or less in line for what happened the previous year, 23.6%. The net financial position closed 63.9 million reais. Continue focus to obviously to discipline in managing net working capital in the company. Okay, Erkan.
Thank you, Marcelo. As we are about to conclude today's presentation, the first half of 2026 has demonstrated the resilience of our business and the strength of our strategy. Despite operating in a dynamic environment, we have continued to deliver solid operational and financial performance while making meaningful progress on our long-term strategic priorities. Looking ahead, our focus remains very clear. We believe Oman Cables is operating at the intersection of several long-term structural trends: renewable energy, electrification, digital infrastructure, AI-driven power demand, and industrial development. Supported by our strong local presence, Prysmian global technology, continued investments, and disciplined execution, we are confident that Oman Cables is well-positioned to create sustainable value for our shareholders, customers, and the Sultanate of Oman over the years ahead. We will continue to strengthen the resilience of our operations. Sorry, if you can mute yourself, I hear now is okay, I guess. We will continue to strengthen the resilience of our operations through disciplined governance, proactive risk management, and supply chain agility. Finally, we will continue investing in innovation, sustainability, and our people, strengthening our competitive position while creating long-term value for our shareholders and supporting Oman's Vision 2040. Our ambition is simply to grow sustainably, innovate boldly, and delivering together. Thank you very much.
Thank you, Erkan. Thank you, Marcelo. Now I believe we will leave the floor for the participants. Any questions, please raise your hand. We can turn it over to you. So, go ahead, please.
Yes, hi. Thank you for the opportunity. I have a couple of questions. I'd like to begin with the expansion that was mentioned, which is expected to be to come online by Q4 2027. If the management, would be so kind to give us some details about that and the expected contribution.
Yes, sure. The expansion that we are talking, which we simply name Plan 3, is an expansion of the medium voltage capability, a certain category of the products that is in the heart of the many businesses intersection, like the power grid, the electrification, and also the specialties in Oman and in GCC. So that will further add enhanced capabilities and capacity into Oman Cable's strategy. We are talking about 8 to 10,000 tons. It depends pretty much on the product mix and the category, and it will be live towards the last quarter 2027. Of course, the latest evolution of the supply chain routes is a point of attention for us, but our teams are following very closely. And as we speak right now, we do not foresee a delay, and we are working very hard to make it happen. Thank you for the question.
Thank you. Thank you. I appreciate the answer. My second question pertains to the working capital. We have seen a significant rise in trade receivables. Is it just, the record date thing because balance sheet is as at, or has there been some change in the working capital requirements?
If I can say something, then Marcelo, please compliment if I miss anything. Obviously, as the business is growing up and turnover, of course, the receivable is having its impact, and there has been some technical overdues, which in the beginning of July we see that this is already going on the better direction. So receivables, despite the growth of the company and the activity, we do not see criticalities on the receivable. Marcelo?
Thank you, Erke. In reality, the discipline for managing the stock to avoid any disruption in the business is required because of the situation in the region. No? But other important point is the price for the metal is very high. It is obviously increase our net working capital. But you can see the percentage for the net working capital by sales is more or less in line for the previous year.
Thank you. Thank you. That explains. And if you allow me one last question, this capacity expansion that you mentioned, 8 to 10,000 tons, how much of it the expenditure has already been paid, and how much more capex should we expect to see going out of the cash flows in this year and the next year? And then does the company have any plans for the remaining cash, because that is a subsequent number?
Yeah, definitely as we speak, the expenditures on this capex is evolving, and I can say that it is within the plan. So there is no big change on our plans on the expenditure allocation of the years, and that is how we proceed with it. I can say that still, of course, to come. It is not a small investment. It is a large investment going on, and it will support our business. Your second question has been, sorry, can you repeat?
Yes, thank you. My second question was, after the expansion actually comes online and then whatever the cash the company has left, are there any plans for that remaining cash? Because they are a sizable number, and I would expect them to remain sizable even after the expenditures for capex.
Of course, we are always looking for the opportunities. We do not. We have really evaluate in depth the opportunities in front of us. Now the cash is becoming even more important in this volatility, and thanks financial strength that we are having in the company, that allows us to operate different from the market players. We are very strongly placed our position to deliver our commitments to the customers. So the strong cash position in this volatility helps. Meanwhile, we are scouting potential opportunities. If we see an opportunity that is evolving, of course, we will be sharing with the market.
Perfect. Thank you for the answers. Appreciate it.
Sure.
Thank you. George, I can see you have a question.
Good evening, gentlemen. Congratulations on the wonderful results. Okay, I got a couple of questions. First is regarding this commodity price volatility. It has been observed that the commodity price has been on a record high. So how are you able to pass this higher price to the customers, the end customers? And do you see any postponement or cancellation of any orders, revision of contracts, anything like that? And moreover, do you see any customer change preference, like high-end, high-margin products has been changed during the first half of 26?
Thank you very much for the question. Of course, the question is very good. What we do is we do not speculate on the metal prices, and we hedge the orders on the 100% back-to-back basis. So the high volatility of the market on the metal side, we are hedging this 100%. Then, of course, there are the other ingredients, which is not that easy to hedge. And at a certain point, we have to reflect this to the market. That's why I was saying that on the other side, we are working a lot on the design to cost, try to be even more efficient in our operations. And we manage in this way. So there is, of course, always a time lag of this increase that you need a bit more time to deliver, execute, and reflect. So far, as our profitability confirms, we were successful on that one. Of course, it is not an easy job, but we are quite experienced on driving such volatilities. We are coming back from different headwinds. So our financial strength, our discipline on execution, and also the global technology is helping us to sustain our profitability. Obviously, we are looking to the better margin product portfolio applications, and we try to compete at every level on these mega trends that I was already touching. Thank you for the question.
Thank you, sir. It was understandable. Right. And one more question, EPS working, my working is coming to 0.065. That is, you have a profit of 5.7 million and the number of shares outstanding is 89.7 million. So it's coming to 0.065 by side. But in that figure is not matching with your income sheet. Can you please comment on how that mismatch?
I'm not sure if I understood perfectly. Marcelo, do you have an answer to that?
Really, sorry, but I don't understand the question. Can you repeat, please, to try to give the correct answer, please?
The net profit of 5.7 million, and we have a shares outstanding of 89.7 million. So if I was, the EPS is coming to 0.065 by side.
Well, let me check it, and maybe after I can come back to you about this. Okay.
Sure. Thank you. And one more question to end. One more thing. Can I comment on the volume of first half of 26, and what are the trends like in this quarter, July?
Okay, so it is very volatile. The first half was okay with our expectations, despite there has been some delivery schedule issues. As you can appreciate, there are congestion on the ports as we speak, and it is very difficult to predict a clarity on Q3. What I can anticipate is our teams are already putting alternative routes, agility into the logistics. From the market demand perspective, we see positive. In the execution part, of course, the escalation of the conflict is an impact. So day by day, week by week, month by month, and quarter by quarter, we are working on the best possible. So hopefully, Q3 volumes will be aligned as our expectations, but it's early to anticipate.
Thank you.
Thank you.
Thank you. Manna, you have a question?
Yes, good afternoon. Thank you for your presentation. I just have a few questions. In one of the slides, I've seen the power distribution segment has come down from 18% to 14%, even though the group sales have grown by 25%. So, do you see the grid-related demand slowing down?
Thanks for the attention. So it is very dynamic business lines. That is the strength of the company, that sometimes some business is a bit down, the other is coming up. We do not see a particular concern on the PD. In contrary, we believe that the grid has to be hardened, grid has to be stronger in Oman, also in the region. So in the medium long run, we see a positive demand. In fact, our investment is also attached to that expectation, which is happening everywhere in the world, and also is happening over here. Of course, some volatility, some dynamic evolution is happening there. So you are right, but nothing particular is a concern.
Okay. Also, one more question regarding the inventories. It has doubled from 25 to 45 million in the first half. So can you please explain what is the gap? Is it due to any anticipated second half demand?
There are two main elements here. One is the cost inflations that we already touched. So they are significant. So they are pushing the inventory value up. And the other thing is we do not have to have any kind of operational disruption in this volatility, which means we are very disciplined in identifying which kind of inbound is needed to complete our production capabilities. So that is why in the first half, there has been a kind of taking precautions approach on the supply chain continuity, not to risk an operational disruption. If this situation improves over time, of course, we are day by day on it, and net working capital will get the alignment. Of course, it is very dynamic. So today is different than yesterday, and probably it will be different tomorrow. So in a very dynamic way, we are looking into that. That is why I'm saying that the financial strength of the company is important to be able to continue a sustainable way our operations in advance.
Thank you for the answers. All the best.
Thank you.
Thank you, Manna. I can read a question on the chat from Zakaria Zakwani. Thanks for the presentation and opportunity. Regarding the medium voltage cable production facility expansion, the question is, what is the current production capacity, and is there any guidance on the expected sales impact once the new facility goes live?
Yeah, thanks for the question. So, of course, we would like to invest, expand, and use all this capacity into the action. So our teams are working proactively to engage the order pipeline accordingly. So we can still think that we have a year in front of us, but we have to work proactively, which our teams are doing on it. So that will help to saturate these lines as we wish to do, and the market trends are supporting. So I do not see a particular concern. I'm very optimistic and confident that we will be able to utilize our capacity in Oman, in GCC, and beyond.
Thank you, Ken. Any additional questions from the participants? If not,
Irjad, if you allow me one note, in fact, it's not one note, one invitation for us, all of us, that as we are using our academy, we have completed 15 events. We are creating really impact, and our academy becomes an important platform to to share, get in touch, and make fruitful discussions and evaluations and the contributions. It can be also valuable to think maybe the having also analyst meeting one day in our academy. So let's think about it, and it can be also interesting to make it available for the analyst meeting in the academy.
Thank you. Excellent. Excellent. I'm sure everyone connected and present in Oman will love the idea and will join the next analyst meeting in the academy and see also the facility that aspect. So thank you everyone for joining us, and looking forward to the full year discussion. Thank you so much. Have a good day.
Thank you. Shukran.